Simon, I'm of the argument that they will do one. I think they want to get on with it. I think they need to get on with it. The economy justifies low Fed funds rate, not zero. Zero connotes an emergency. The emergency's passed. So I think they will find every excuse to move. Yeah, it seems to me that the historical pattern will prevail. That is more volatility in stocks, some bumps along the way, but ultimately higher because the Fed is raising rates because things are going better. I think the same thing on the other side for the bond market. I think the bond market will struggle, and interest rates will drift higher as the Fed moves at the short end. Some would argue should have done it long ago.
I actually very much disagree with you. I think, if anything, this reminds us of the much more dismal tone that the Fed has taken regarding the overall economy as of late. Looking in those minutes, we see a continued acknowledgement of the recent weakness that we've seen in household spending, with many of the committee members concerned that that weakness will persist going forward. We also see lingering concerns regarding the strength of the U.S. dollar, low energy prices, undermining U.S. growth. We saw several officials worried that that weakness in the first quarter would carry over into the second quarter. So if anything, I think this is going to redirect the focus back to the weakness of the fundamentals in the U.S., which has been ignored as of late. And I think this weakness further justifies the Fed to remain on hold at the earliest, the latter part of 2015. But as we have long contended, holding the Fed on the sidelines until 2016.